going on, guys? It's Alex. I just wanted to make a quick video. It's been a long time since I made a YouTube video regarding this portfolio. We're sitting at $46,792. Man, the portfolio is growing. I'm excited. But most of the trades have been swing trades. So I'll get into the portfolio. I'll show you kind of how it's going. So for today, we're up about $300, including the overnight trading. Past week, $1,000. Past month, $1,500. 3 months, $4,566. Year to date, $15,000 or 48%. So phenomenal return compared to the S&P. Phenomenal growth this year. And then 1 year, $14K, all time $18,900 or 68% since 2022. So about 3 years. But yeah, so we currently we made big changes. Most of the gains came from Google. But we'll get into what we have right now, and then we'll speak on that, and then what I see for 2026. So Microsoft, I have 25 shares, average cost $478, market value of $12,000. I really like Microsoft. All these plays are for 2026. So I like Microsoft. It has been going down quite a bit after that 550 top back in around October. The reason I like Microsoft is it's one of those reliable compounders who have been doing great, despite the P ratio being relatively on the premium side, 34 P ratio, which is kind of high. But the historical average has been around 30 for Microsoft. It's a pretty expensive stock, but it trades at a premium because of the high quality business. I think that it will do well in 2026 and continue to recover and hit that $600 range for the end of the year, which could be cool in gains. Next up here is MasterCard. So I really just initially bought this one alongside with Visa, which I'll get into soon. So MasterCard is sitting at $578. I have 20 shares, market value of $11,000, average cost $551, and we are up $529 or 4.8%. So I like MasterCard. I like how they capitalize more market share worldwide as opposed to Visa. And I think that MasterCard is trading at a pretty good valuation when I bought. I was slowly adding here and there. MasterCard has been at its cheapest valuation and then like in the recent 5 years. So that's the reason that I was inclined to buy. And they're just a compounding machine. Dividend growth is there. I mean, if you see the performance for 5 years, it's phenomenal. So I just want to accumulate MasterCard. I wanted to get into the financial sector for 2026, and then we'll see where we go from there. Next one is going to be the one that I continuously still buying at the price. I think Amazon is good right now. It's at $232. We're up 1.6% today. 40 shares, market value of $9,000, and I'm up just 2%. 2026 for Amazon, I think it's going to be a great year. Similar to Google, I think they're undervalued, being underseen by investors. The whole transition from robotics and the AI investments they're making, I think it's going to pay off. We might have a couple of rough years. I'll continue to buy Amazon, even if it goes down under 200. I like Amazon a lot. But like I said, I have 40 shares at 227. If it drops under 200, all I see is a buying opportunity for me. The P ratio is at 32. Under 30 would be amazing for I'm sorry, not Microsoft, Amazon. But yeah, overall, I like Amazon a lot. Next up is Visa. Similar to MasterCard, I like to own both of them. So they kind of build up about 16,000 in my portfolio. 15 shares. We're up shy of under 10% or $452. Market value only $5,000. It's half the position size of a MasterCard. I like MasterCard a little bit more, like I said, because they're worldwide as opposed to being concentrated in the United States. But I still like Visa. They're compounding machines, both of them. Good dividend growers. And you can't go wrong with Visa and MasterCard. I don't see them going nowhere in the next 5 to 10 years. But yeah, that's that one. These two are kind of more like spectacle, like not spectacle, speculation, waste management. It's a little overpriced. I would love to buy this stock at 180. It's always traded at a premium. I mean, it's a very consistent stock if you look at the chart here on Robinhood Markets. We only have 5 shares, average 210, and we only have $1,000 or about 5% gain. But yeah, it's too rich in valuation for me. I just have $1,000 because I just want to see that I own it. But I'm probably gonna sell it and move that capital into Amazon or different allocations. Same thing with Netflix. The thing with Netflix, it's been going down significantly. Hit a high about $135 or so, $193. It's down about 30%. Netflix with the whole Paramount and investment they're making, I think that we will have some rough times in 2026, and we might drop significantly. We're down 30%. I can see this dropping another 20, realistically being down 50%. But I think over the next 5 years, Netflix will be back at that $200 range in the next 5 years, and I'm slowly building out a position. I haven't been buying aggressively currently. I only have 10 shares at $94, and I'm going to continue to buy as this goes down. If this goes under 90 and $80, I'll start buying a couple thousand. I want to build this up to about 50 shares or hopefully 70 shares. Get a nice little position into this one. But I did want to cover real quick. We have 6,000 buying power. We're about to close the year, but if opportunities present themselves, I want to have a little bit of buying power and cash. But just to cover the realized profits year to date, most of the profits came, if you could tell, this is a nice little feature, came off of Google and Microsoft. I bought a lot of Google back when it was $160. I sold most of my shares around that $300 range. So it was like almost 100% winner. And that was one of my biggest positions if you look back into the other videos. But going into 2026, my goals is to keep investing monthly. I'm investing about $500 to $1,000 a month. So I hope to hopefully be at 65,000 by the end of December next year, and continuously get there little by little. I'm only, a young guy, so hopefully by the next 2-3 years I can hit 100,000. That'd be amazing. But yeah, little by little, this portfolio keeps growing. I keep making pretty good choices. I think it's all about buying at the right time and making sure you buy quality companies, and you buy machines that are making compounding machines. I mean, that are making money, and I feel good owning all these companies. And yeah, thank you so much for watching, and I hope you enjoyed the video.